Zach Pakoff here, and welcome back to another lesson video. Today, I will be going over the 3-1 text. So let's jump right into the video. Alright, so as I had stated before, I am going to be going over the 3-1 text. So we're starting chapter 3 today, and in this chapter, we will be learning about how to journalize transactions. In addition to that, we'll also be learning about how to define accounting terms related to journalizing transactions, identify accounting concepts and practices related to journalizing transactions, record transactions to set up a business in a 5-column journal, record transactions to buy insurance for cash and supplies on account in a 5-column journal, record transactions that affect owner's equity and receiving cash on account in a 5-column journal, proving and ruling a 5-column journal, and proving cash as well. Okay, so in this first lesson, we'll be talking about journals, source documents, and recording entries in a journal. And in this first part, we'll be talking about journals and journalizing. So a journal is a form for recording transactions in chronological order, and journalizing is recording transactions in a journal. All right, next we'll be talking about a 5-column journal. So the 5-column part comes from the general debit and credit columns, the sales credit column, and the cash debit and credit columns. A special amount column is a journal amount column headed with an account title. A general amount column is a journal amount column that is not headed with an account title. An entry is information for each transaction recorded in a journal. Double entry accounting is the recording of debit and credit parts of a transaction. And a source document is a business paper from which information is obtained for a journal entry. Okay, next we'll be talking about checks. So a check is a business form ordering a bank to pay cash from a bank account. So this first part where it says number, date, 2, and 4, that's all going on this check right here. So when we bring that stuff all over, it shows the check number, which is check number 1, has the date, which is August 3rd of, let's say, the current year. It says paid to the order of Port City Supply, has the amount written in number form, has the amount written in word form, says that it's for supplies, and it's signed by Kim Park. And now this next part is showing us the check stub. So it's showing us the balance brought forward, the amount deposited, subtotal, other, amount this check, and balance carried forward. So the balance brought forward started out as 0. Then we deposited money into the account. So anytime that we deposit money, that means that money is being added into our account. So since we deposited $5,000 and it started off with 0, it became $5,000 for the subtotal. So we bring that on down since there's nothing else for other. And since we have written a check, that gets deducted from our $5,000. So if we take $5,000 and subtract out $275, that gives us our balance carried forward of $4,725. Okay, next we'll be talking about sales invoices. So an invoice is a form describing the goods or services sold, the quantity, and the price. And a sales invoice is an invoice used as a source document for recording a sale on account. So what this is showing us is the name of the business, where they're located, and then it's sold to Oakdale School. And this is showing us the address as well and where they're located. And this is sales invoice number 1. It shows us the date, which is August 12th of the current year, and the term is 30 days. So this invoice is being sold to Oakdale School, and this is also showing the address and the business, which is Techno Consulting, and their address as well. So next we have a description and an amount column. So under the description, it says that we have a computer network setup, and the amount is $350. So since there's nothing else that's under here, this becomes our total. If there was something else under here, we would add that amount to the $350, and that would become our new total. Okay, next we'll be talking about other source documents. So a receipt is a business form giving written acknowledgement for cash received. So it's showing us the number, the date, who it's received from, what it's for, and it's showing us the amount in number form. So as you can see here, this is receipt number 1. The date is on August 1st of the current year. It's received from Kim Park. It's for an investment, and it shows us that it's written for $5,000 and no cents. This is written in Word form and also number form down here. And it's received by Kim Park. This is also showing us the business name, which is Techno Consulting, and their address as well. Okay, next we'll be talking about memorandums. So a memorandum is a form on which a brief message is written describing a transaction. So this memorandum is showing us the business name, their address, and the number, so it's memorandum number 1. So it says that we bought supplies on account from Supply Depot, and the amount is $500. Signed by Kim Park, and the date is August 7th of the current year. And this is a calculator tape. So it says that on August 12th of the current year, it also says that T12 because this was on the 12th day of the month. So it started off at $0. Then we added in 150, 35, and 110. So that gave us a total of 295. Okay, next we'll be getting into some transactions for this lesson. So this first transaction reads, on August 1st, received cash from owner as an investment, $5,000, receipt number 1. Okay, so anytime that we are receiving cash, that means that our cash account is going up or being increased. So for this transaction, the first thing that we're going to do is write in the date, which is August 1st of the current year. Under the account title, we're going to put Kim Park Capital. And then we're going to put the document number, which is receipt number 1. Now we have to figure out what account gets debited and what account gets credited. So since we have received cash from the owner as an investment, anytime that we receive cash, that means that our cash account is going up or being increased. So for this transaction, we're going to debit cash for $5,000. And then we're going to credit Kim Park Capital for the same amount. And this is on page 1 of a journal book. Now, for this transaction, if you remember from when I read over in chapter 2, both of these accounts are being increased. So since cash is an asset, it has a normal debit balance. So it increases by a debit and decreases by a credit. Whereas on the flip side, for the owner's capital account is part of owner's equity. So it has a normal credit balance. So it increases by a credit and decreases by a debit. And R1 for the document number means receipt number 1. Okay, next we'll be talking about when we pay cash for supplies. So this next transaction reads, on August 3rd, paid cash for supplies, $275, check number 1. All right, so anytime that we pay cash for something, that means that our cash account is going down or being decreased. So for this transaction, we're going to write in the date, which is the 3rd. We don't need to write in the month because this is in the same month, which is August. So we don't need to write August and the year again. We just need to write in the date, which is the number. For the account title, we'll write supplies. Document number is C1 or check 1. This is also on page 1 of a general journal. And now we need to figure out what account gets debited and what account gets credited. So since we have paid cash for supplies, anytime that we pay cash for something, that means that our cash account is going down or being decreased. So for this transaction, we are going to debit supplies for $275, and then we're going to credit cash for the same amount. Now, for this transaction, we have an increase and a decrease. So since these accounts are both assets, they have normal debit balances. So they increase by a debit and decrease by a credit. But if you remember, since we have paid cash for supplies, our supplies account is going up or being increased, and our cash account is going down or being decreased. All right, so that is the end of the 3-1 text. So in the next video, I will be going over the 3-1 work together. All right, thank you.